Welcome back. Chris Smith for Peter Credlin tonight. Now, you don't need me to tell you we're facing perilous economic circumstances at the moment. COVID and geopolitical instability have led to a basket case of economic conditions smashing so many household budgets and, of course, even companies. One economic condition which has emerged from the past 2 years relatively unscathed is housing, despite a small dip in the middle of this year. However, a forecast from Westpac today has painted a grim picture with a rapid correction expected by 2023 from steep interest rates and higher inflation, leading to a major slide in house prices. So joining me now to break down all of that and what might be closer to the truth is business columnist at News Corp, Terry McCrann. Terry, welcome to the show once again. Australia's faced steep rising house prices probably for the past 2 and a bit decades. Might we finally be seeing a bubble burst here?
Short answer, yes, Chris. Clearly, house prices have to come down. As you say, they were rising significantly, much higher than the rate of inflation, much higher than wages were rising through the 2000s and the 2010s. And the Reserve Bank gave the market a really big kick along in the beginning of 2020 and through 2020 in reaction to COVID, when it cut its rate to zero and all but gave home loan borrowers free money. I mean, interest rates were down to 2%. And obviously, the rate of interest you pay gives you a multiple of what you can borrow. So we saw this real surge in house prices through 2020 and 2021, coming on top of what we'd already seen. Now, self-evidently, once the Reserve Bank started to take away the cookie jar, house prices were going to initially, at first, plateau and then fall. Now, that's the broad outline, obviously, Chris, but whether it'll be 18 to 20%, as Westpac is saying, I'd be sceptical of that. I mean, that's a forecast from a bank, and it's about forecasts of the future. And as we know, all forecasts of the future have to be treated with a huge amount of skepticism. But secondly, it's built on forecasts of what the Reserve Bank will continue to do with interest rates. That's assuming the Reserve Bank will continue to deliver higher interest rates. Now, we don't know that's going to happen yet. So there's really two things we have to think about: how high the Reserve Bank goes and what the impact then is on property prices. So yes, property prices have to come down, but it's for most people, it's really only taking some of that cream off the top. It's the people that bought in the last 2 years, Chris, that are going to face the biggest pain.
I have not heard of an 18 to 20% drop in the value of homes in this country since I've been alive. So it will be quite a shock to so many people. Just away from housing for a second, the other mammoth beast within the Australian economy is our $1 trillion superannuation industry, which today called on the government to release a national strategy over carbon emissions and unleash potential in green energy. Terry, tell me this is not happening. Tell me this is a bad dream, that our super industries who are setting us up for retirement are so consumed by this green ideology. Serious?
Well, I think they're also a bit realistic, Chris. Yes, they are to some extent consumed by the green ideology, but obviously at the end of the day, they want to make money. So what they are really talking about when they ask the government to lay out a plan is not a plan in some nice generalised sense. We've already got that with the 43% emissions cut target and net zero by 2050. What they want is for the government to give them guarantees that if they invest in green energy, quote unquote, they won't lose their money. So what they're really asking for are indirect or direct handouts. So yes, we'll put $100 million. Yes, we'll put $100 billion. Yes, we'll put $500 billion into these projects, but we want to make sure that you do make sure that we don't lose any money, and in fact we make money. So they want guaranteed returns and a guarantee against loss. So I guess we lose. I mean, at least we don't lose on the super. We might lose in terms of the power prices we have to pay, but super is not going to go there unless it gets those sorts of guarantees.
Well, that's good. So we'll have a great retirement. Superannuation will be healthy, but we'll just be in the dark, right?
Exactly.
Yeah.